Welcome to the Hurst Trading Room. My name is David Hickson, and this is a video update for the 27th of April 2015, Freedom Day in South Africa. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you are watching this video anywhere other than on our Hurst Trading Room podcast channel, then please make sure that you subscribe on either iTunes or YouTube. In that way you will be notified as soon as I publish a new video. Let's take a look at the markets, and we're at a very interesting juncture in my opinion. Here is the S&P 500, and as you will know, I have been discussing the fact that there are two possible analyses that are playing out at the moment. This is one of them, which places the 20-week cycle trough over here at the beginning of February. And as I have discussed in videos from the past 2 or 3 weeks, I believe that this trough here at the beginning of April is potentially or probably an 80-day cycle trough. As you can see on this analysis, you can see I have pinned those troughs using Sentient Trader. You will see the little pin icons down at the foot of the chart, which means that I have influenced the analysis that Sentient Trader is performing. And you will see that those troughs have been positioned there. I think this is a very viable analysis. It is one that we have discussed over the past few weeks. So let's zoom in and remind ourselves of what we are expecting to happen. There is the 20-day FLD, which of course we trade using the FLD trading strategy. And with the previous 80-day cycle trough somewhere over here, you can see I've actually pinned it to the Monday, but potentially it occurred on the Wednesday prior to that. I won't waste time now discussing why exactly I've done that, but the trough occurred somewhere in that week in my opinion. That is our A category interaction as price broke up above the 20-day FLD. It was a very typical A category interaction. You must remember that trading the FLD trading strategy, an important aspect of it is to recognize the character of each of the interactions between price and the FLD, and that is a true A category interaction because we had a good clean cross up and price went right up to the target, our T2 target, which was somewhere over here, and it not only achieved that target but it exceeded it, which is something that you often see in an A category interaction. So that's looking very good to me. A B category interaction, price comes back down to the FLD and then tracks along the FLD, straddling it. The high of each day is above the FLD and the low of each day is below the FLD. That's what I call straddling the FLD. And it does that until the C category interaction, which looks as if though it occurred last week on Friday. So there it is there. I've drawn those labels a little bit skew, but I'm sure you can see that for yourself. There's the A, B, and C category interactions. Next, we are expecting a D category interaction, which will provide us with a short trade. And that is a short trade that I would be interested in taking. Let's have a look at what else the analysis tells us. We're expecting a 40-day cycle trough over here. Here is the nest of lows. It's a little bit staggered, as you can see. Not a perfect nest of lows, but that's often the case, indicating that we are expecting a 40-day cycle trough probably in about the second week of May, or at least the week starting the 4th of May, somewhere round about there. We're expecting a 40-day cycle trough. So we are expecting price to come down, cross below the FLD in a D category interaction, and D category interactions are usually very accurate interactions, as I've spoken about many times before. It's one of the characteristics of a D category interaction that it will accurately achieve its target to the downside and then bounce back up again. So we need to be nimble about getting out of that trade. But it looks as if though that's going to be a good trade to make, a short trade. And you will know I've been writing on the blog, and lots of people have been speaking about the fact that the markets are looking ripe for a turn down, and that move down into the 40-day cycle trough could potentially be the first move down. Of course, we are looking at the market heading down into the 40-week cycle trough here. You can see the nest of lows for the 40-week cycle trough, and so we're expecting generally a downward movement in the markets over the next it looks here about 6 weeks. It might last for as long as 3 months. And of course, potentially, it might be a much, much longer downward move. But certainly the first move down would be this move down into the 40-day cycle trough, after which we would reassess the situation and see whether we're expecting more of a bullish move or whether the bear market is expected to continue. Now let's have a look at the other analysis that is potentially playing out in the S&P 500, and this is the analysis shown in this chart. And as you can see, let me just show you the highlights of this. Here is the 20-week cycle trough. There we go, in the second week of March, and the 40-day cycle trough potentially occurred in the second week of April, just about 10 days ago. So that is the 40-day cycle trough. It means that our interaction between price and the FLD is slightly different. The sequence is slightly different. And in my opinion, this is the slightly less likely analysis. But as I'm going to show you in a moment, it doesn't make a huge amount of difference. So let's zoom in and take a look at that interaction between price and the FLD. Let me zoom in a little more carefully. There we go. And let's see what this tells us. Here is the A category interaction as price rose up above the FLD following the 20-week cycle trough in the second week of March. Now, I was speaking a moment ago about the characteristics, the nature of an A category interaction, and as you can see, this interaction didn't quite achieve its target, or perhaps it did just achieve it. I don't remember, but it doesn't look as if though it quite achieved that target. Now, that's not impossible, of course. This could be an A category interaction, but in my opinion, it is not as likely as an A category interaction as the previous one that we were looking at on the other analysis. So that's one point against this analysis, if you like. Then the B category interaction, price came down, dropped below the FLD, and sort of hung about below the FLD for a good week or two, or about 10 days. Now, again, that's not a typical B category interaction. A typical B category interaction is where price comes down to the FLD and tracks along it. So that's another point against this analysis, in my opinion. The C category interaction was then this interaction over here, so we would label that C on this analysis, and that was a very good interaction. It would have been a very difficult interaction to get into if you were trading this particular analysis, because the 20-day FLD, as you can see, price didn't really quite cross down below it, so it would have been a tricky interaction to get into in terms of trading it. But it is a good C category interaction. There's nothing we can really argue about there. Then, as discussed in last week's video, price came down, just dropped down below the FLD to form the potential 40-day cycle trough, which, as you can see, Sentient Trader has now phased as a 40-day cycle trough in the second or third week of April. That, again, doesn't look very good as a D category interaction. We will label it a D category interaction, of course, because it is the next interaction following the C category interaction. As long as you know your alphabet, you can't really go wrong. But it's not a very typical D category interaction, because usually a D category interaction, as I've just mentioned, crosses down below the FLD and accurately achieves its target. Now, in last week's video, I spoke about the fact that, in fact, the FLD cross might have been a little bit higher, in which case that target was very accurately achieved. So it could have been a D category interaction, but it's just not making as much sense on this chart as it was on the other chart, which is why I favor the other analysis. But this is not impossible. Let's keep going with this path of reasoning. And of course, the next interaction was the E category interaction. Now, as you can see, price tracked along the FLD. You can see the low below the FLD, the high above the FLD for every single bar, all the way up until Thursday of last week. So tracked along that FLD for almost a week. And that's not typical for the price action between a D and E category interaction. Of course, again, that's why I favor the other analysis. Nevertheless, it is possible. It doesn't entirely rule out this analysis. We do sometimes see that happening. What are we expecting next? We're expecting an F category interaction. So Now that is really quite interesting, because on our other analysis we were expecting a D category interaction, which is a good profitable short trading opportunity. In this analysis we are expecting a short F category interaction, also a good profitable short trading opportunity. So that's really good news. Both of our analyses are telling us the same thing, that we are expecting a short trade next. Whether it's a D or an F category short trade doesn't really matter too much at the moment. It might affect our position sizing, because of course we use the underlying trend to calculate our position size, and the underlying trend will be slightly different according to these two analyses, but nevertheless effectively they're saying the same thing, which is that the next trading opportunity is a short trading opportunity. That's important, and it's a trading opportunity that I would be interested in taking. Of course, if this is the true analysis, then we are expecting price to move down into an 80-day cycle trough later in May. Remember, in the previous analysis we were looking at a 40-day cycle trough in the week commencing the 4th of May. Now in this analysis that would be a 20-day cycle trough. We would see a smaller, less impressive bounce out of the 20-day cycle trough, followed by more of a move down. F category short trades are generally more profitable as trading opportunities than D category short trades, and so if this analysis turns out to be the correct one, we are likely to make more money out of the upcoming short trading opportunity. Now I would like to show you something which I hope is not going to be too confusing. Hold on to your hats or whatever you need to hold on to stop your heads from spinning, but I would like to show you the results of all of the information that we have about this analysis. And the way in which we do this is I turn on every single FLD. Okay, there are all the FLDs, and I'm also going to turn on every single VTL. There are all the VTLs. Now I'm not doing this to confuse you. I know there are a lot of lines on this chart and none of it makes any sense, but here is why I am doing it. It is sometimes a really useful thing to do. Let me just zoom out slightly on this chart so that I can make my point. Here we go. And now let me try to not select any of those FLDs or VTLs. There we go. We don't want to give precedence to any of them. Now the reason why sometimes I do this, and it's a very useful thing to do in my opinion, is that you see a big mess on the chart in front of you. But what's important is that there are areas in that chart where there are gaps. And I'm not speaking so much about in the future over here. There are obviously gaps in the future because FLD lines and of course VTL lines don't extend very far into the future, because the shorter cycle FLDs only extend by half a cycle into the future. And so obviously there are gaps in the future. I'm speaking about some gaps that we can see in the near future. And I'm going to draw some circles. There's a bit of a gap, there's a bit of a gap, and there's a bit of a gap in the near future. Now what does that mean? Gaps are very interesting places on a chart, on a Hurst cycles analysis chart. They tend to be places where price will often try to move towards, and they will price will generally move very quickly through those gaps. So they tend to be fairly important places on a chart. I'm not going to dwell on it too much, but let me just zoom in and show you what all these lines on the chart are potentially telling us to expect. In particular, I see a very interesting gap over here. Now here there's a big mess of lines. Okay, can you see all those lines? Lots of FLD lines and VTL lines. So as price is moving through this territory, it's going to encounter lots of support, because if it's moving down at that point, the lines are beneath the market, so it'll encounter lots of levels of support, and it'll struggle to get through all those levels of support. But these areas where there are no lines, these areas over here, are very important. And now, as you can see, according to this analysis, we're expecting a 20-day cycle trough, and I would not be surprised to see price coming down into this area and finding support somewhere here. But now price doesn't find support where there are no FLDs. We know that. Where might it find support? Well, if you look a little more carefully, you'll see that we actually have two FLD lines there, And here they are. There is this FLD line and this FLD line. I think that's 80 days and is it 20 weeks? Doesn't really matter terribly much at the moment. But the important thing is that those lines are forming levels of support. So there's a sort of a band of support, if you like, that runs up in the chart over there. And so we're expecting a 20-day cycle trough or perhaps a 40-day cycle trough. We'll go and look at the other analysis in a moment. And so I wouldn't be surprised to see a 40-day cycle trough or a 20-day cycle trough forming round about that level. And so that might prove to be a good target for our short trade. Let me just go and take a look at the other analysis and do the same thing there. Again, not to confuse you, but just to see if we can identify some areas on this chart which might provide for areas of some interesting price action. And here we can see there's a fairly strong sort of an area opening up down there, and then there's a much bigger one over there, and in between them there is a band where we have, in this case, 3 FLD lines. So let me just clear that and perhaps zoom in a little bit and highlight that band again, because I believe that band might prove to be fairly important. There it is, very roughly. So that is likely to prove to be a band of some support, and here is our 40-day cycle trough nest of lows, and as you can see it's occurring just there at the beginning of that band of support. I would not be surprised to see price coming down and then finding support at this as you can see, it's a rising level of support. So that's just a small little detail that I hope you find interesting. Let's quickly take a look at some of the other markets, the US markets. Let's start with the Dow. Here is an analysis of the Dow, and as you can see, I've done very little manipulation of this analysis. All I have asked Sentient Trader to do is to position the 18-month cycle trough over here in the middle of October. It was presenting a slightly different analysis. I won't go into the details here. You can see that it has automatically, for itself, decided that this is the 20-week cycle trough at the beginning of February, and that the 80-day cycle trough occurred here at the end of March or perhaps the very beginning of April. So we have a very similar analysis to the analysis that I prefer in the S&P 500, and I believe this is a good analysis. In the Dow, we can measure these cycles and see how long they are. That 20-week cycle came in slightly short at 110 days. The average length is 136, so it comes in 26 days short, and we can measure that 80-day cycle, which is only 58 days, which is 10 days shorter than the average, so it's a slightly shorter 80-day cycle than average, but nothing wrong with that. You will often see cycles running short, of course. I think this analysis looks very good, and let me have a look at some salient points about this analysis. Let me just zoom back a little bit and track left. There we go. You can see the same thing is being expected in the Dow as is expected in the S&P 500, namely a move down to a 40-day cycle trough sometime either this week or perhaps next week, after which, of course, we will get a bounce back up again, and then it should move down to this 40-week cycle trough. The 40-week cycle trough is expected at the end of May, perhaps sometime in June. It's a very neat nest of lows for the shorter cycles, from sort of 40 days and shorter, maybe even 80 days. The 40-week and 20-week cycle trough are actually expected quite a lot into the future. So it'll be interesting to see how that plays out. But certainly we're looking at a very good short trading opportunity coming up in the Dow. As you can see, here is the 20-week cycle VTL, which was breached to the downside over the Easter weekend, and it was breached slightly 2 weeks ago and a little bit again last week. So the 20-week cycle VTL has been broken, and the market is really struggling to stay up above that. Remember that, of course, that means that we have seen the peak of the current 40-week cycle, which would indicate that, in theory, that price there in the last week of February, or was it right at the beginning of March, that peak there is the peak of the 40-week cycle, in theory. and therefore it's going to be downhill now until the 40-week cycle trough occurs. And therefore our profitable trades are likely to be those short trades. Let me just zoom in and take a look at the interaction with the FLD, and here you can see it's the same thing as the S&P 500. There's our category A interaction. Here's our B interaction as price came down to the FLD. It tracked along it, a perfect example of a B to C category interaction. Where in our C category interaction, notice how the Dow has really failed so far to get up above the level of that trend line up at the top there. Our next interaction and trading opportunity is a D category short trading opportunity in the Dow. So exactly the same thing as we're seeing in the S&P 500. Quickly take a look at the NASDAQ, where the situation is slightly different. The NASDAQ is interesting because I believe that the third possible position for the 20-week cycle trough, which I haven't really considered very seriously in the Dow and the S&P 500 because it doesn't work very well for me, but it is a possible position for the 20-week cycle trough, and here it is in the NASDAQ right at the end of March or the very beginning of April. There's the Easter weekend, as you can see that gap over there. So this analysis works really well in the NASDAQ with the 20-week cycle trough occurring there at the end of March. What, of course, that means is that this 20-week cycle VTL in the NASDAQ has not been breached, which is potentially why last week we saw new highs in the NASDAQ. All right. So when you see new highs in a market, it means that, of course, the VTL either has not been breached or perhaps we're seeing an exception to the rule. When a VTL gets breached to the downside, it tells us that we have seen, in theory, the peak of the cycle 1 degree longer. So when the 20-week cycle VTL is breached to the downside, it tells us that we have seen the peak of the 40-week cycle, as I've been speaking about in the S&P 500 and the Dow. Now, the S&P 500 has not yet made new highs, although very nearly. The Dow has clearly not yet made new highs and still a little distance away from creating new highs. And so potentially the theory of price breaching that 20-week VTL to the downside is holding true. However, in the NASDAQ, new highs were achieved last week, which means that either the theory isn't holding true, and it doesn't always. It's a guideline more than an absolute steadfast rule. But the other possibility, of course, is that the 20-week cycle trough did occur over here, and therefore that is the 20-week VTL that you see, that dashed green line. And therefore it is quite possible that we are going to see new highs, or well, we have seen new highs, there's no question about it. So what is the NASDAQ telling us to expect in terms of trading? Is it telling us a very different thing in terms of trading? Well, no, actually it's not. Let me just pull this down, give it a little more room to the upside, and let's turn off that VTL, keep our chart a little bit cleaner. Here is the sequence of interactions between price and the FLD. There's the A category interaction, and as price crossed up above the FLD, it achieved its target and exceeded it, a good looking A category interaction. The B category interaction, price came down to the FLD, found support at the FLD, and then tracked along that FLD for the first 3 days of last week, perhaps even a little bit on Thursday. Certainly sometime during the course of Thursday it broke up above the FLD. That's our C category interaction. Our next interaction in the NASDAQ is the D category interaction, as price breaks down below the FLD and comes down to this 40-week cycle trough. So you can see that although the analysis in the NASDAQ is fairly different, it has a very different position for the 20-week cycle trough from the S&P 500 and the Dow, it is telling us the same thing. A short trading opportunity is the next trading opportunity, with price moving down into the 40-day cycle trough. Of those three trading opportunities, which is my preferred one? The S&P 500, the Dow, or the NASDAQ? My personal favorite is the opportunity in the Dow, because the Dow has been looking less bullish Okay, it hasn't achieved new highs, and it's looking a little more bearish, if you like, and so the short trading opportunity in the Dow is, in my opinion, the better of these three trading opportunities if you need to choose one out of the three. The S&P 500, and of course we've got all our FLDs there. Let's just turn them all off again. The S&P 500 is my next favorite. I enjoy trading the S&P 500. As you know, I speak about it a lot. I find it very reliable. So the S&P 500 would be my next favorite trading opportunity out of the three US markets that I've discussed today. And my least favorite trading opportunity would be in the NASDAQ, because it has definitely been more bullish recently, and potentially that's a 20-week cycle trough that we see at the beginning of April, and the first D category short trading opportunity following a 20-week cycle trough is often not a very profitable one. There are still profits to be made, of course. Let's quickly take a look at the euro to US dollar. I spoke last week about the fact that we had seen the first 40-day cycle trough play out following this potential candidate for a very long cycle trough in the second week of March. Now, what I quite like to do when I'm considering an analysis is I don't place too much emphasis on the exact magnitude of this trough. Let me just cross out some of those diamonds. I can't yet answer the question of whether that is the 54-month cycle trough or the 9-year cycle trough or the 18-month or the 40-week even. I think it is a trough of at least 20-week magnitude. And that's all I need to worry about for now. I hope that that makes sense to you. Since then, we have seen a very good, clean, M-shaped 40-day cycle. That's a beautifully shaped cycle. It ticks all of the boxes. You can see here is our interaction, an A category interaction, a little bit messy, as you can see. Price took a while to break up above the FLD, but nevertheless an A category interaction. The final level of the cross, remember you're looking at the cross of the median price. Final level of the cross was about here, which meant that I think that just about achieved its T2 target, perhaps not quite. But it's a fairly good A category interaction. Then price came down, and let me just clear that and draw this again, because it's useful to consider these interactions without any distractions. There's the A category interaction. Here is the B category interaction. As price came down to the FLD, it pretty much tracked along it. It dropped slightly down below it. It tracked along it and then jumped up above it for the C category interaction. You can see there's a generally fairly bearish sort of a flavor to these interactions, with our A category interaction struggling to get up above that FLD. That's a fairly bearish sign, perhaps not quite achieving its T2 target, another slightly bearish sign. The B category interaction dropped down below the FLD and couldn't quite get back up to it. It did, but only just. The C category interaction gave us a bounce up for only 1 day before it came down again in the D category interaction. Then, of course, the 40-day cycle trough formed. So, although that is a neutral cycle shape, as I spoke about last week, it's a neutral cycle shape with a fairly early peak and a slightly higher closing trough. A neutral cycle shape, it definitely has a bearish flavor to it. Here is the E category interaction as price crossed up above the FLD. A very tricky E category interaction because it in fact occurred over the weekend, as you can see, where median price crossed up above there. We have seen a little bit of a follow through, but the market is looking a bit sluggish and a little bit bearish. So our next interaction in the euro to US dollar is a short F category interaction, and that is certainly one that I would be interested in taking. Why? Because the market, the euro, has been looking fairly bearish throughout this entire cycle, through all 45 bars since the formation of the at least 20-week magnitude trough that formed in the second week of March. So it's been a bit of a struggle for the euro to get back up again, indicating that there is definitely still some bearish sentiment in this market, and a short F category trade should prove to be a very profitable short trade. I think we might see the euro coming down again quite hard. Whether this trough in the second week of March turns out to be the big trough, the 54-month cycle trough, or whether we're going to see a deeper trough forming here sometime in May, I don't know. I don't care very much, to be absolutely honest, because, of course, I'm trading the interaction between price and the FLD, and the exact magnitude of that trough in March doesn't bother me very much. It looks as if they were going to see another deeper trough, indicating that that will then prove to be the big trough perhaps, but it doesn't bother me too much as long as I'm able to make profitable trading decisions while considering the deeper analytical puzzles. Very quickly, let's round off today's video by taking a look at gold. As you know, there are two analyses that I like to look at in gold. Let's start with the one that you're probably more familiar with, the trough analysis, which assumes synchronized troughs in the price of gold. Here is the 20-week cycle trough forming in about the middle of March. Here is the A category interaction. Again, a very good A category interaction that achieved and surpassed its T2 target. Very good A category interaction. Price then came down to a B category interaction. Do you see how price came down to the level of the FLD, tracked along it for several days? A really typical B category interaction. The C category interaction is as price breaks up above the FLD. Then it came down, and then things got a little messy. This looks like a D category interaction over here. But was this here the 40-day cycle trough? According to this analysis, no, it wasn't. In fact, what happened was we had a D category interaction as price broke down below the FLD. Price then returned to the FLD, which is unusual, particularly following a D category interaction, but it does happen. We do see it. The markets aren't perfect. Price then tracked along the FLD and have now dropped down again. So now, according to this analysis, here's our nest of lows for the 40-day cycle trough. According to this analysis, the 40-day cycle trough is still expected to form, or potentially formed, perhaps even on Friday last week, indicating that we would have an E category long trade next. However, you must be careful because, as you can see, it is possible that the D category interaction was over here, and that perhaps this is a trough of the 40-day cycle. That was meant to be a question mark. There we go. Perhaps that's a trough of the 40-day cycle, and so then this would have been the E category interaction over here. This was F last week, early last week, and then we would expect a GH category interaction, which would not be a long trade that we are interested in taking. So you must consider the possibilities quite seriously before entering into a long trade. Personally, I think it's more likely that we're going to see an E category interaction next, and the reason I say that is because of the alternate analysis, which is of course the inverted analysis, which considers the fact that we have synchronized peaks in the price of gold as opposed to synchronized troughs. And here is the 80-day cycle peak according to this analysis. Here is the A category interaction between price and the FLD, which was a short interaction, a short trading opportunity. Here is the B category interaction as price came back up to the FLD, tracked along the FLD for a few days, then dropped down below it in a C category interaction. What do we have next? Very simple. A D category, that looks like B, let me cross that out. A D category interaction, which is a long trade as the price of gold heads up to the 40-day cycle peak, which, as you can see, is expected around about the middle of May. So the inverted analysis in gold is also recommending a long trading opportunity, and so I'm going to be a little bit bullish for the price of gold, but only for the short term, of course, only for the next 2 or 3 weeks. And particularly, I will be looking quite carefully to see how price interacts with this FLD, because there is the danger, as mentioned in the other analysis, that it's going to turn out to be a G category interaction, which will not prove to be a profitable long trading opportunity. Thank you very much for joining me in the Hurst trading room today. I look forward to seeing you next time, and I wish you, as always, profitable trading.